Doing well. It's Friday night, so we're gonna dive into some charts. Oh, let's see if you guys can see me real quick. Make sure everything's working. I think that it is. There we go. We are live. How about that? Let me know if you guys can hear me all right. I think you guys should be able to. I did change everything around. So I moved some screens around. The ultra wide is over here. The new, not the new, but the old like 32-inch curved Samsung is right in front. That's one we'll be sharing charts on. Seems to be the one that you guys get the best clarity. So I'm gonna try and listen and watch while I put the kids to bed at the same time. Oh, beautiful, man. I'm doing the same. My kids are actually, um, they're 7 and 9, so they're out in the front room watching the Crudes right now. Got that set up, so hopefully it's not too loud. But either way, doesn't really matter. We're gonna get into some cryptocurrency, right? So I'm gonna go ahead and share the chart. We'll just start off with. Yeah, there we go. That's what we want. That is the screen that we want. And there we are. Should be up and live. Should be able to see the Bitcoin price. Now, I have not updated my levels yet for the day because I'm not trading this weekend. So, full disclosure, not trading this weekend, but I'll run through yesterday real quick with you. And then we'll talk about how we're going to set our chart up for this weekend and what we're looking for. Right. So, very simply put, okay, you had this pump today into the gold pocket. So, that is just a swing high to swing low. Gold pocket in this previous week high. So that's all we're doing is marking out the previous week high. And we will talk about that a little bit. Obviously, I'm watching the DXY. I'm actually still looking for this local low. You notice that's the only alert I have on my chart right now is this local low. So I would like to see the DXY kind of come down and then maybe make that move up, which implies Bitcoin has another leg. But, you don't always get what you want. So going into the weekend, it is what it is. But we're going to go to the Bitcoin chart real quick. That way we can run dueling charts here. We're going to cover some alts, AVAX, Polkadot, XRP, a couple of the coins that I'm actually trading. Maybe look at QNT as well, because I think QNT is a popular one right now. But again, this is your previous week high. You can see how we've swung fail it, so to speak. And if we zoom out to the weekly, this is something we covered in the members live stream earlier in the week. Really gave us some key levels here, being the September high as one, but also this weekly open. So it gave us a nice box between 22,810 and 22,714. Both really important levels on the move up anyway. However, kind of rearing their head is very important because you can see this is the last local high, and holding on to this area would actually be quite bullish. So what you're looking at here is you're just kind of mapping out your market structure, I guess, for lack of a better term for it. You've got the last local weekly high, and now we have the weekly open right here. So you can imagine that if we've swept the weekly high, come down, close below the weekly open, it doesn't mean we can't push back up into this region again. However, usually you're expecting to get some downside. And, where that's going to come in at is at the key level from the 6M1 of 2021. So the 6-month pivot. This is a level I'd been harping on as we moved up into this region. I said this is going to be the key level for support. It absolutely has been. Is it a perfect level? No, but it's pretty dang good. And if you look left, this is what you're working with. So again, math doing what it's supposed to do, giving us the appropriate pivots in the market, right? So that's all we're working off of is clean levels and a clean range. And it lines up really, really nicely now when we look back and we say, okay, we have the, previous week high here. We have the local weekly high here, and we have our weekly open here. But where is our weekly low? Right here. So if we get this move into next week, right, we now have a previous week low here at 22,333, lining up nicely with this resistance or this support, I guess, an old resistance. You start flipping this into, resistance. It's no longer support. This is going to be a fairly quick move down, in my opinion. You've got some single prints here, and then you're looking all the way back down to, again, I've noted that the top of the structure could provide support at 21,481. However, I'm still going to be looking down into this like lower band region here, somewhere near 20,688.50. I think that's a likely landing zone in that scenario. Will we fill this gap? I mean, it always has the potential, right? So that's what I'd be looking at. Let's make sure the comments are good here. I'm going to listen. Mine are 9, 6, and 2. Wish you, dude, you're battling it with 3 of them. I left a short in. Oh, that's the worst. That is the worst. So for me, I think that it's appropriate to head short in this region, to be honest with you guys. I really do. However, we've now identified the key level, the weekly open. We have the new weekly low that's coming in as of Sunday night at 6 p.m. And we have a new weekly high and a previous week high. So we have our SFP here already at 23,402. If you were to bring this down, you could necessarily at 20, what is that, 23,090, 97, something like that. What is this high? 23,073. So that'd be the defensive area there. But realistically, looking at this box, now this box was really, really nice. So when we got this push up, guys, this is a box that we had on our chart. This was the, if we break through this level, I was looking for new highs. I was calling for 24K if we broke through this. However, it front ran it for an NPOC. So when we look back, we did note in the members live stream, I'm not going to go clip it or anything and be that guy, but I did say it can wick below this level. And if it does, you need to be prepared to take action. And that's where we come back into this low time frame stuff. So now we're talking the low time frames. You have negative Fibonacci here. So I'll turn on the 1 and 0 so you can see where I pulled those real quick. Right. So you can see that this is your 0 line at the previous day low. Well, the old previous day low and the old previous day high is the 1. We have a negative gold pocket here. That's where you wicked into. Then all you're doing is basically you're playing the reclaim. You can go to the 1 minute for this if you need to, right? So you're essentially trading this as, okay, I've effectively swung failed these lows. I'm leaving these alone and I'm making higher lows. Do I have an entry here? You'd have to go to the order flow for it. It's not as clean on the price action. However, once you reclaim the VWAP here, or you could go down to like a 10-minute candle. You guys know that I like to do this thing called the 10-minute strategy, and you could very, very effectively mark that out. However, this one's actually not going to be great. What's the 15 look like? Still not great. So that said, I still think the best entry, and I put this on Twitter, was the previous day low right here. Really, really nice entry. It's very clean. You've reclaimed the previous day low. You've come back tested it to the dollar. You're holding the VWAP. One would expect you to do what? Probably rotate to the previous day high. That's where I'd be targeting. Basically taking all of this liquidity and moving into the previous week high in your local gold pocket from, if you recall, the overall high to this low. That is your gold pocket. And that's why you're seeing the sell-off you are, but it hasn't really sold off and broke anything. You're just moving back into the, the volume weighted average price. The VWAP is there and your daily pivot. So again, the daily pivot is the average of price from yesterday's price action, meaning that if you took the high, the low, the close, you divided it by 3, this is the number you're going to get. So that's where you're finding yourself. So if you start losing this weekly open, in September high here, about 22.8, I think that's where things start to get a little iffy. You start breaking down from there. I think you're going to put some pressure on this 6M1. And then if I recall, you have some, and where is it? I think you have some single prints that come in beneath us. Been up here for a little bit. I swear we did. There we go. So I've got those coming in just above $22,000, right? And so effectively, this is one giant single print all the way down to about that 21.5 area we were just looking at, where I said this is pseudo support. It's a swing failure pattern of that prior consolidation at 21.481. So this is showing us about 21.5, but it's letting you know that if you break down from this region, you start taking these stop losses and lose that market structure, probably going to make that move down, right? We have not formally tested these yet either. You can see that we've come close on a wick, like right here. We've not formally come down into them. As Max would say, I'd like to see these tested. And that really is the test of a trend, meaning that when you come down and you test those, you're testing to see if the trend is still up, in the sense that are buyers still in control? Are they going to defend this breakdown level? And if they don't, you find acceptance, well, probably going to move down pretty quick through that void, so to speak. And then once that happens, it's all hands on deck. So one thing we do need to do, we've got Friday Night Knowledge. Yeah, man, this is going to be a good one. Chart whisperer and technician. Yeah, I don't know about all that. I'm just a guy who borderline has an autistic problem with the charts. That said, this is all pretty easy. So I'm going to delete some of the stuff on the chart because we just don't need it. And we're going to set this up from scratch, kind of, so to speak. It's something we normally don't do. So this might be a little bit longer of a live stream as we get into the altcoins, but there's going to be some nuggets in here for you guys for sure. So we're going to go straight to the daily. And the reason we're doing that is I need to know where my previous day high and low are straight away. There's my previous day high. I now have a new previous day low. And I believe I've already marked the EQ, but I deleted it. No, I did not. There's the EQ, and I believe I can see that here. Let's go down to the 5 minute. We'll check it out. Yeah, perfect. That's what we want. So we now have a new high, a low, and an EQ, and you can see that right here. So there is your low, there's your high, there's your EQ, which you're kind of holding on to. So again, you start breaking down. We said 23,073 is kind of an important level. And then you've got this support here. But if you start breaking down from here, well, you start targeting the lower half of the prior day's range, right? We would probably, to make it simple, you could just come over to your Fibonacci tool. And I like to call this the order block setting. And I'm just looking for the .75 or the .25, however you have it set. If you pulled high to low or low to high, you should always go left or right though. So .75, I'm looking for this box to get tested again. So if you lose this right here, the EQ, which comes in at 23,000, lines up nicely with that daily swing failure pattern that was kind of trying to hold there at 23,073. You're looking down to 22,810, which if you're a day trader, which I don't like to trade on the weekends, it's a 1% move, give or take, a little under. That's a pretty good move, so that's actually a decent trade. Obviously, you want to be in from higher up. You don't want to be trying to break out trade this to the lows, but that's the idea behind it. Lose this level, probably heading down to this box. We're confirmed as well with just some really basic, intraday range looking. So let's take a look at the regression from the day before. Make sure this is up to date. Yeah, and you're also be breaking your regression. So this would be the trend from the prior session or the prior day in this instance, because that's what we're looking at is days. And so this would be your trend for yesterday, and it's gotten things fairly well. You want to be buying at the low of the trend and selling towards the high of the trend. You find acceptance. What do? You short to the low of the trend, right? And the low of the trend has gone back to the EQ, and now you're looking to either see this breakdown, confirm what we were just talking about at the daily previous day EQ or the previous day midpoint, and move into this box, or you're looking for this to bounce, right? So that's really the only two options on the chart at the time. Now, I don't know that when we got up to that high, what the order flow looked like. I took the short initially. I took like a 4% short on that one on a win. You know what? Order flow is not that great, but you have a lot of selling imbalances. Crypto Anon, link for Discord in the description. Thanks, Richard. Welcome, David. We got 11 of you in here. Hey, I'm excited to have 11 of you guys in here, I guess. I actually can't see how many people are in here. It's not letting me know. 18. Awesome, guys. Thank you. So breakdown from previous day EQ we're looking for here, right? And we already know what happens. Anything below 22,407 that's not an SFP of these lows is not good news. So if that's the case, we're expecting probably down into this region. You've got some naked points of control. So Bitcoin is fairly lined out. Now, if you break this previous week high at 23,402, right, that's going to be the kicker. If you can make this move up over the weekend, hold on to this support, then yeah, there's a chance that it does this. And I think it does go to this 24K up to I think I have it mapped out here, 24K up to 24,700. I think you can see that if you can hold this level and rebound. However, I don't trade weekends. Like I said, it's not something I'm too concerned with. I'm gonna tackle this on, Sunday night, Monday when the market opens. I think we have a members live stream on Sunday at 1 o'clock my time. So that's when I'll start really kind of like honing in and saying, okay, what happened over the weekend? Where are we at during the week? So Bitcoin's still range bound, guys. If you recall, if you watch the channel, what have I been telling you? You've got a really nice range here between here and here. This is your range, and this is what you should be trading. Okay, so thus far, it's done you really, really well to put the levels on your chart. Even trading this EQ right here, you don't need to use the volume profile to find these levels. You can do this all by hand if you'd like. If you want to use the volume profile, there's nothing wrong with that. You're just going to get a little bit more narrow price action. So trades are going to be a little more limited. However, it doesn't mean you can't be effective. You just have to find the proper entry catalyst. But yeah, Bitcoin range bound. Most important levels on the chart are really coming down into this region. Lose 23K. I think we test 22.8 to 22.7. And that's really going to be the key level here inside of the range. You can see that's actually your first local high right here as you entered and formed this range, right? This was the key level on the way up. You can see we formed it there. So now we're just going to extend our box over. And you can see the new weekly open also confirming really nice support and resistance. Need to see this level continuing to hold. If not, challenging of the local lows here could be in play, and you could make that move down into this region. But again, anything can happen. I think everyone was playing this as a triangle, and it's a triangle until it's not. That's all it is. They're just consolidation, guys. So I'm gonna hop over to some other assets though, and we'll get something going here. So this is one that I'm going to toot my own horn on. So I've seen it all over Twitter now, but dude, I was posting this like early. As soon as we hit this box back here, the third week of December, I was posting on that this was going to be a potential reversal for Tesla. We just had to get back above this box right here at about 126, which you can see if you go to the daily was actually your initial rejection off the initial reaction. You held the PCZ to the T, and now you've moved back up to where the pivot, the X pivot point. So this is where the structure started. You've cleared the quarter one, right? So we have our quarter one mean reversion. Essentially, the average of quarter four is the quarter one average because that's the average of price from the prior session. So you've now come up, you've hit multiple targets, and you're realistically looking to see 211. And I would just mark out this local high right here personally. This little guy right here, I would mark him out, and that local high is 198.92 into the pivot. And if you do something like this, then you've got a short back down to where support right here. And in the stock market, that's 20%. That's not 20, 10%. It's a big move. But realistically, your target is the B leg, just like it was on the S&P 500, which we've already hit. We're coming to re-challenge again, but your target's technically all the way up here around $233 for Tesla. So AVAX. This is a big one I haven't done almost any charting on. It looks like I have, but this chart is super, super old, very old chart. All this is new. And the reason I'm bringing it up is you've come up to a naked pivot here, which I believe is a monthly pivot. If I recall, none of this stuff is marked in my object tree, which is kind of disgusting. But you've broken a downtrending line of resistance here, right? So you've got a nice breakout. You could draw this as a falling wedge, however you'd like to. Where do you want to go on a falling wedge? Well, I'll get out of log for just a second here. In a falling wedge, which sometimes alts are better in log, but in a falling wedge, I like to use a little bit of Fibonacci with it. It's just something I do. I like to take the high to the low, and then I'm targeting like the 50%, the 382, the 618, very simple stuff. We're not reinventing the wheel here. There's our 382. We have massive resistance here in terms of pivots and other things. You have the old naked point of control here. You've got the 6M1 pivot. It was resistance, then claimed the box, makes the next move up to the naked pivot, which is kind of hanging it up right now. So this is an old monthly pivot that I just kind of tracked down to have. And now we're looking up to where the gold pocket of the entire structure. And if you note, this is the value area high of quarter three. And I bring that up because the value high of quarter three, local gold pocket, that is a really big area on this chart for this asset. Because if you go to the quarterly chart now and you start looking at things just from an overall standpoint of where's the inflection point, this quarterly candle is really what you're trying to get back inside. You're trying to reclaim this, price action. And it starts with this quarterly range. So you're going to be playing this guy right here. And I'll use the square. This is a little bit easier. And let's not make that extended. There we go. This guy right here. So I want to know what the volume looked like inside of this quarter. So we're just going back to what we already know. It's just past, performance essentially. So you mark out that quarter and you can go from there, right? So we know that this is the quarter, and this, if we extend that range out, looks like so. And then we know that the gold pocket from high to low, which I can turn on the 0 and the 1 so you guys can actually see it better. So you can see how I pulled this in case there are questions. There you go. So from the high of the structure to the low, and we're looking for the gold pocket and to cycle this range because as of right now, it's the most important high time frame data for us. Now, we do want to always zoom in and zoom out, right? And so We want to make sure from a standpoint of, horizontals, do we have anything else there saying that we should be looking for higher? This is obviously a big take profit, in my opinion, this naked pivot, because you've already taken these local highs. You have to watch out for the sweep here and the move back down. But going to like your monthly chart, right? You can see that you've got some resistance up here in this region. You can see how the wicks are coming in, because this is where reversals happen. So this is why you guys want to mark these, right? So this is where it makes sense, not even getting into the buyers and sellers of things, but this is the type of area you want to mark. One, it marks the top of a supply zone, meaning that this is where supply is entering. So when price rallied right here, what did it do? It gets sold down. It rallied again and got sold back down. And in fact, it reversed. It made new lows. So this is going to be an important inflection point in the chart. So that's how you want to mark these. That's why these are relevant, right? So aside from there being trapped buyers here, from being people that are still in positions, things like that, they're going to affect the market. This is just, from a psychology standpoint, it's just an easy place to mark out. And that level is going to be coming in around $23.72. So we'll go ahead and mark that one as well. And we'll see how it lines up again with our levels. We'll turn on there, and there we go. Where's our gold pocket? Where's the level we just looked at? Where is the value area high of this range? There you go. So you're looking between 23.12 and 23.77 as your next target. If you get through that, I mean, realistically, you're probably targeting the high of the structure, but we can get to that. That's a $30, jump. That's a jump from 23 to $30, which seems, like a little bit, but it's actually quite a bit in percentage. So for me, this is the next really relevant level. We've already reached resistance here. We may find ourselves finding support somewhere. That's fine. However, if I was looking at this move overall, I'd be in favor of the rotation of the range. You guys know how I like to roll. I love my ranges. The original range daddy, according to most of YouTube, if you guys have been following me for more than a few years. So yeah, that's how I'd be playing it. And if you wanted to be really, really, kind of loose with it, you could even come all the way back to here and say, this is all one giant range. And again, supports the idea of moving through this gold pocket, or at least to it, to rotate the range in full, as long as you're holding on to about 1744 or just this local support, in my opinion. I mean, you could realistically come all the way back to here and nothing's technically broken. It just doesn't look as nice. It's not a harder trade. It's just, it's going to take time. And I generally don't have the patience to watch an altcoin like AVAX. So I'll just set alerts. So for me, the next available trade is up around $23. Let's see here. I got to catch up in the chat. Sorry, guys. Hopefully you guys are doing okay. This is the most underrated place on crypto YouTube. Thank you, Shillbilly. I appreciate you. And Richard, David. Yeah, don't take trades on weekends for sure. Turned off my movie. Oh, I'm sorry, man. I didn't mean to ruin your day. Not ruin your day, but ruin your movie. You can always watch it again later, though. Can you chart XPX? I will for sure. I'll look at Gala. I haven't in a long time. So I called the short on Gala a long time ago, Billy, and I was just kind of one of those people. I was like, I'm just going to short this thing into the floor. Kumas. Yeah, we'll look at a couple of them. I actually do chart the SPX, so I have some opinions on this chart. I have some opinions on this chart. We'll get right back to crypto after this, I promise. I do have some opinions on the SPX, but that's neither here nor there, right? So in terms of the SPX, this one's pretty simple. So again, you guys know how I like my high time frame levels. I've been shilling this quarter one low on a lot of charts for a long time. When we got our breakdown and we finally got a nice massive reversal, which on the 3-month chart, it doesn't look like it. But if you went and you marked out the quarter one low right here and you went to the daily chart, this is a pretty big move up. You got to think the reaction off of this level was pretty hefty, right? All 11%. It's a good size move, $4,600, right? So very, very impressive for something like the SPX. So straight away, we're looking at this saying, man, we've got to get through this level. Let's go to the monthly. Again, look at this quarter one low right here. It's this. I guess I should make it a little brighter for you guys so you guys can actually see what I'm talking about. There you go. This white line, this is your quarter one low. Look how important this level has been. And it continues to be. Now, if you go to the daily, you're going to see some chop above it right here, which is fine. However, it's resistance. I've been talking about this level since we came down below it. You get back above this, and I really do think that you can kind of not skip around a little bit, but you can start looking for something up here in this region. And all I'm doing at that time for, I can't remember who asked, but for whomever asked, I think it was MC, I'm looking at this local high, and I'm just saying, are we going to swing fail this high into $4,400? And if so, does it come all the way back to here? You know, like, is this still support? That's what I'm looking for on the SPX, point blank. So for me, coming into this week has been really, really important. So you had a couple harmonics that played out for anyone that likes those. I obviously do. You had this much larger, which I'm almost positive we're the only ones who called this out in the space, called this out in advance as it was happening. Again, not the toothy own horn, but fuck, man, like sometimes you have to. We got the reversal here, looking for it. Wasn't the cleanest because you're usually looking for a 1618, but a little bit extended. However, you know, you got what you needed. You swung fail all the appropriate lows. You got the move off. And then where did you go? You went right where you were supposed to, between the X pivot, because that's the start of the pattern, right? And now we have our B pivot. So this is now your resistance to get back inside where the range. And if you just turned this off, this has been fairly decent at getting price action. This has been resistance. So if you bump through this, you know, one would start to say that this pattern becomes very legitimate. And then you can start using things like your volume profile. And you can say, okay, well, what's the volume look like in this section? It's actually pretty high. Again, value area low right here. What are we trying to do? Break back in from a structural and a volume standpoint. I would like to see the 2022 pivot. However, if it goes any higher than that, well, then your next target is this C leg right here. So the C leg is also the overall point of control of this structure only. Okay, so from D to X or X to D, this structure, we're not including any of this price action. That's where the volume point of control comes in. So it would actually imply a move almost all the way back to the highs and like some kind of a, you know, either a breakout or a topping pattern, which we've seen historically. So for me, I'm bullish on risk on assets right now because there's been no reason not to be. However, everything is coming into resistance kind of at the same time. And I think when that happens, you can turn to the DXY and then say, okay, well, what's the DXY doing? You know, if everything's coming into resistance, you know, we want to see everything reject accordingly. Of course, sometimes it's not that simple. But if I come over to the DXY, again, another pattern at play, another harmonic that we called back in the summer, or I did anyway, basically called the top on this thing. And I unbeknownstly called the top. I said, I think I could get another push up into this box because I wanted perfection. But again, I'll remind you guys that perfection does not exist inside of trading. Man, where did that guy go? There we go. This was the pattern. Let's actually update this because I have a new template for that. There we go. Easier to see. This was the pattern at play. Really nice bearish reversal. Implied a really big consolidation down here before a good expansion, right? You had a nice range right here, which you can see traded very well. And you've made a move up and formed a channel. And if I get rid of this pattern now and I go to log, you'll see, no, I adjusted this. That's right. This is an adjustment channel that needs to go. You've done some things, but you've come all the way back to these 12-month levels. And this is a really messy chart, so I do apologize. You can see that you've got these levels right here and right here. So this level, again, what did we just talk about? Where did the reversals happen, right? You've shot up, you found resistance, you came back up, found resistance, and then you reverse completely. So this is obviously a key inflection point of the chart. Same with right here, right? And we had another one right here in the middle, which I'm just using as an EQ, kind of like a middle of the road. However, I wouldn't necessarily trade this level by itself as it's been washed through, but it makes things kind of simple, so we're going to leave it. You're back at this support, and if you start losing, you know, 102.21 on like a material closing basis, like monthly basis, it's not going to look good. So for me, this was my zone of support coming down to it, except I have a one marker at that key low right here. And I want to see if price moves into this level and then starts reclaiming, you know, some of these key lows that we had marked out previously. Like this was a very good one where you can see that this was what we were looking for, is range expansion. If it couldn't hold 104.775, we were looking for that as a deviation and a sign of weakness on the push up. And we would be looking for this box, which panned out really well. However, don't confuse, local support for reversal. It doesn't have to reverse. So I'm still looking for that confidence in the DXY to say that it's actually going to make an actual rally, and it's just not giving that to us. So if it loses, I would even, conservatively 101, 297. I think you look all the way down to like 96, which would be great for risk on assets. That's great for the SPX. It implies the SPX is going to hit those targets we just talked about. Implies Bitcoin's going to work its way through resistance, maybe head up to some of those upper targets we've been hearing about and that we've been looking for. It's one of those things where, all that works in concert. However, it doesn't have to. So we have to be cautious until this area is lost, just like everything's at resistance. So, we take the data as it's coming to us because you do have something like this, working out. You could easily call some kind of like a falling wedge. And I'm not a patterns guy, but, it is coming to a precipice, so to speak, meaning that it's going to pop to the upside or downside. It may even fake out. We don't know. I mean, we have to take the data real time. Like we don't do predictions here too much. We just talk about what's likely to happen. And for me right now, it seems more likely that assets continue up, but that changes in an instance. And we have some really important FOMC meetings coming up this next week. So we're going to get some data that, we don't have, which is really great. Trying to catch up in the chat. You guys are rocking the chat. So that's always great. Appreciate it. Bear 69, you love to see it. Yeah. Kadena. I shit all over Kadena in a video, and I think I'm gonna have to eat those words probably. CVO's in here. Cheers to CVO. Got some good people in here. We'll take a look at some alts here in just a second. And happy Friday to you as well. Unforgettable. Dead cat bounce. I guess it depends on what you're looking for. My personal opinion on, the DXY is I'm not as good at charting probably Forex pairs. I'd assume that there's some kind of discrepancy in TA, even though I've done pretty well on the DXY. I think I've done this one pretty well. But on Bitcoin, I started talking about it, man, way back in like December. I was talking about getting up to 26,724. I still think that's my target. There's no reason not to think that this isn't going to be hit. So I think 26,724 is a good estimate for like, if we can get above that, then yeah, all these higher targets are very, very possible. But this was my original mean reversion play, was coming up between, I would say, anything over 25,000. And you're kind of just like, why are you even flirting with the rest of this move? But 26.7, there's a single print at 26,505 that I would be aware of that closes out. Just like there was one that closed out at 25,200 and we went to 25,207, I think, or 25,211. I can't remember which one it was. It is 25,211. So I would just, bear that in mind. There is resistance up here above the range, and that's where you might see that big pullback. You might get it, over the weekend. We don't know. We've given the triggers for it, though. We know what we're looking for locally to see that pullback, right? So, there's no stress. I'm in my longs from lower. I'm in a short still from around 40K. So whichever one of those positions wins out is going to be the one I hold and continue to hold, right? So the long is from 16.6, by the way, if anyone's wondering. It's down here. So it's not a perfect entry, so I can't claim I bought the bottom, but I did an okay job. I did pretty good. Let's move over from AVAX. I think I said I would cover XRP, Polkadot. These are things that, we should Q&Ts there. Dot's a really simple chart, so we'll cover that one very quickly. It's kind of doing something anyway that we talked about. So Polkadot, right? We said that I'm not that interested in buying the point of control because you know how I roll. I don't diddle in the middle. It's been a theme of mine for years. We don't buy in the middle of the range. You had a local gold pocket here, which was really nice, coming in at the value area low. So for me, it was just like, okay, I'm just going to sit and wait. I bought Polkadot. I got the call the bottom on Polkadot pretty much. I don't know if I still have that box up. I think I deleted it, but does not matter. You had a box at 438 to 419. There was a Q4 NPOC from 2020 that was coming in at 438 right here. So you had a nice little box to buy in. Price came down. What do you do when price meets one of your targets? Well, you wait for an entry and you pull the trigger, and you got several entries off the low. And we've talked about this. You can see you've got several SFPs here on a 4-hour or daily time frame. You could go back into price action if you wanted to. You could start pulling your local gold pockets and you could say, did I do anything? Yeah, I came down and I tagged the gold pocket, held it as support, and then made my move up, right? So there was plenty of opportunities to get long on this asset once it was down there. You don't need indicators for everything. And then you were just targeting your very first target off of, a sub 438 entry is 531. It's 20%. And then after that, you're looking up for the 6M1 at $6. And now you're looking back at 678, which is the 12M1 from 2021, a very well-known level on the chart. Again, weekly swing failure pattern right here, or potential weekly swing failure pattern, I should say, as we have not technically done so yet, I don't think. Yeah, see how you're closing back above it? Yeah, so this was the old weekly high right here. You did swing fail it initially. Now you're closing above. And if you closed above, I am on the record as saying, is I think that if you're holding this little box of support here, because this is your overall 2021 low as well, also an important level. It's been an important level throughout history. It's just important to mark the important levels and keep them on your chart. I think we can re-challenge this high. And that's kind of what I'd said. I would say we've effectively done that. But I'd love to see this come up and tag 678 again, or maybe even claim it and make the next move up. That would imply the rest of the market goes with it. But if someone was bullish on this asset or wanting to trade it, that was something I gave in one of our leading crypto live streams. If you get up here and start living in this box, I would expect an attempt into this region. The real question becomes, yeah, we've cracked. That's exactly. So here it is. There's your gold pocket. So look at this. Look at the shorts it gave you off this area if you're scalping. But each time you held the range, you held support, you made the higher low, and off you go, right? So now the question is if you come down, you deviate this and start finding your way back in, that's not really bullish. And then you are looking at this as maybe an overall beginner's range here. And let's just go ahead and scooch this thing on over. And then you would be looking at this, okay, we've come back up. We've actually gotten a rejection at the value area high. Maybe I should be considering my options if you start losing this, that it's going to come back to the 6M1 at 607 and probably rotate the range and full down at like 566, right? So if somebody was like interested in trading this, that's how you would want to do it. You lose this box right here between 638 and 651. And I think that the odds of you trying to rotate the range and full back down to the mid fives is on the table. But that's not the end of the world. It's not the end of the world at all, actually, on a move like this. Is like 60%. So, it's just how I trade DOT. Yeah, I think DOT's one of my bigger holdings. I went pretty heavy in the DOT because I knew that I had a really good opportunity here. I did miss some lows like ADA. I missed ADA. I didn't trade CRO, but called the bottom on that one really well. Solana is a really easy trading one right now. Matic is one that I'm in. I've been in Matic a long time. And I was looking for Matic to come up here and tag this. Obviously, I've got one alert on the chart at 122. So if it got back above these quarterly and monthly SFPs, so if we go to the quarterly chart, so I'll show you guys how you find these zones, right? Really simple, okay? So again, let's get rid of this guy and this guy. This was a really easy move for us. We nailed it back in October, that like to the T. Like that one was perfect. But now where are we at, guys? We're on the quarterly chart. You find me on the high time frames again, which is a really important thing to do. What do you notice right here? You've come up and you've effectively swung failed this quarterly high here at $1.05.45. Go to the monthly chart. Same thing happened right here at 101.97. So what does that do for us? It gives us a nice zone of resistance, okay? And then to the downside, you can see you've got a nice monthly swing failure pattern here in the 2023 open. And you've got your Q4 low. Okay, so again, down to the quarterly. Where's my low after we failed at this high? There's my low. Why is it important to mark this low? So let's say you're looking for market structure on a breakdown. You're like, well, I don't know what's important and what's not. You put a doji in like this, right? So you put in this really big candle to the upside, and it's got this, it's kind of ugly. It's an ugly candle. It's not great looking. It's not a death sentence, but it's not good looking either. It's not something you want to see. If you start holding 71.56 cents and this low as resistance, what do you think you're likely to do? Well, probably fill in this candle, right? You're probably heading back down towards the open even. So for you, it's best to say, okay, well, this needs to hold a support. It's an important area that needs to be held, because if this becomes resistance from the prior session, which the prior quarterly session is all we're referring to, if this becomes resistance, I don't know what's going on my mouse, but it's I think it's absolutely shitting the bucket right now. But if this becomes resistance, then yeah, my move is probably down, right? So that's why this low matters, because you've put in this topping, candle, but you held everything as support. You never came down and lost the low. So that's what's important to note. So now when we go back and we look at this on like a daily time frame even, and we put on our boxes, we say, there's my support, right? We just lined it out on the high time frames. We didn't do anything special. We just used a couple horizontals. Look how nice this support is. I put this on my Twitter, by the way. This is all on my Twitter, like publicly. These tweets get no love because I think people don't understand what they're looking at. But in reality, it's just experience and charting. But then there's your highs, right? So this has been a very clean range to trade. And now you're expanding it to the upside. And this would be a very, very nice move up. And I'm curious because it looks like it. What was that? 74.77, 74.72. Look at that. You've already hit the 1-to-1 box, which is I always put as my 886 to 1 spot on a trend-based Fibonacci. But look at your 1-to-1 at 122, showing you that this is going to be a really important resistance to hold, right? These little, like this little local high. Because if you start holding this as resistance and moving your way back down, then you've got to consider this whole area from about right here on over as a range. And yeah, look at that. That's fucking really nice. Excuse my language. But there's your value area high. Here's our major support, right? So I'm going to move this support around so you guys can actually see what I'm talking about. Major supports here. Well, it was major resistance. Now it should be major support. But if it's not, what happens? Well, you're going to take these lows into the point of control. So you have the opportunity for a swing fail and maybe a bounce back into resistance before down. But then you're looking at this as it's probably going to come back into the range. And according to this, I'm in a much larger accumulation zone. And I'm really more interested at that time if I'm going to get the opportunity down in this region, probably down at the value area low, down to the Q2 open and 6-month open. That's a few steps ahead, like way far ahead, because we don't have a formal rejection yet. This is not technically a top yet, but it has hit a major, major area. So for me, it's one of those things where could it push up a little more? Sure. But if you start failing, so what you're looking for, you're saying, okay, if it fails here, what do I do? Well, you should have a plan for that, right? And that would be my plan. I'd play these levels, obviously, but breaking back into this region, knowing that this could all be one giant range and bottoming structure, giving me another opportunity at the lows, like some kind of a pseudo double bottom, whatever you want to call it. That's where I'm interested. I'm not picking any more Matic up personally. I picked all my Matic up from this range right here. I had this on my charts since 2021 that I was going to buy Matic right here between like 31 and 40 cents. So I didn't buy the exact low, but I did pretty all right. I sold up here at about $1.30. I did nail that move. I still have that on here because this is one of the nicer, cleaner AB equals CDs you're ever going to run into. It was a perfect 1-to-1 in time. It was a really, really nice pattern that played out perfectly and straight back to where the C leg for support. So very, very clean chart for Matic. You are at resistance though, so caution, right? That's all I'd say. You're at resistance. We know what we need to see if we're going to lose support. We've got the levels on our chart. Anything under $1 is probably not good news. So you just kind of, you move on from there. You just keep trading it. You wait for the next best opportunity. And that's really all I'm doing. Like if I don't get to trade these altcoins, especially, I just move on. I just go do something else and I wait for that money to be used on a setup that I like. And if I don't like the setup, I just don't trade it. If it doesn't hit my level, it's not the end of the world. I think that's a good mindset to have, or it works for me. So hopefully, that's something that if it can help you guys, sure. XRP is a really simple one. I've talked about this one so many times publicly. I always try to rally you guys up a little bit, but it's really not meant to be rude. It's just for fun. This is big, big support. And would love to continue to see this holding. I've been buying this support down in this region, sub 33 cents specifically. So if that's lost, if this box is lost, realistically, again, we'll go out to the high time frames, guys, and we'll look exactly where you need to be looking at. Go to the quarterly chart. Notice that this is the Q1 low. We just talked about that on the SPX. We've talked about it on Bitcoin in the past. This is your 29 cent overall point of control from this range. Now you've got What do you see here? This looks like support. What do we see right here? We see buyers entering, price is trying to reverse off this level, and the same with up here. So realistically, your next big resistance is 47.99 cents on the Bybit chart, the perpetual USD, inverse perpetual USD chart. And I would expect to see that tagged. And that's probably going to be at least a take profit one for me. And so these are spot trades. You don't need to do much with leverage here, guys. I traded this up to 50 cents last time. I think my entry was 36 cents. No, it's 34 cents, like somewhere right here. Traded it up to 50 cents or so. It's 48% no leverage. So the same can be said with like right here. Even if you got the exact low to high, it's 48% right here. So one of those things where, again, you don't have to like get the exact low or high to make money in between a 48% move. You just have to make sure you pay yourself. But I think XRP is in a good spot. That's a bullish reversal pattern. If it breaks this quarter one low, really good chance on seeing, 77 cents and then 83 cents and maybe even higher than that over time. Not taking any news into effect on that, guys. The news is absolutely worthless. Do not listen to people that tell you need the news to trade this coin. Those people, I'm going to be very upfront with you. If you guys are in that echo chamber, I'm sorry, but you guys stay off the chart because you don't know anything. Like, stay out. You don't know shit about fuck. I'm just gonna be rude about it. Like, stop. I get more hate on XRP, but I'm gonna hate right back because I've made more money on XRP than probably anyone that holds this coin. So it is what it is. Harmony one, near is actually one I really, really want to look at because I'm supposed to make a video on it. So I'll probably do that. Make sure I'm caught up in the chat. I see a lot of galas. Chat GPT. Somebody said chat. I did use Chat GPT for both the title and the picture for this, just so you guys know. I used AI for both those because I'm really lazy. So it is what it is. Statistics was one of my best classes. I love statistics, so it was really, really good. But again, this is an easy chart. But I will say this: if you break this level, you start coming through here, you're probably going to see 19, 17, maybe even 14 cents. Like, it's on the table. Like, and it's not the end of the world, but be prepared for those things because you can't just be up only. I do think that we're in an environment where we're seeing a nice reversal, and I don't expect it to end. But I do need to be prepared to pivot that stance if it arises, right? So I'm bullish until things aren't bullish anymore. I'm not going to pretend to know everything. Let's look at Gala. I've not traded Gala in a long time. So I was looking for shorts on Gala up in this region. It panned out really well for somebody on Twitter named Stonky Coin. They were the only ones like trading it. Like, we were looking for this bounce back and from this level to the point of control, looking for shorts all the way down. And I think I was looking for 4 cents initially. And I said, well, I really wouldn't buy down in 4 cents. What I would do is if you got the SFP and you reclaim this level, I'd consider it. And you can see that you came down, you kind of messed around down here a little bit, broke down, rejected, came back up, lose the level, and just continue your downtrend. So you've got a major, major downtrend here that's being broken. What time frame is this? Oh, this is your 6-month downtrend. Very nice. So this is the second half of the year. That's all this is. So all these regressions you see are based on time. They're not based on market structure at all. They just show you what the trend is going to be. And then I've got like a little different settings that I put on there that make it pretty worthwhile. I don't think this is going to be very useful because it's such an aggressive downtrend. But we're going to look anyway because I want to know what the yearly looks like. Yeah, that's not worth it. That's not useful at all. We kind of knew that was going to happen, though. Yeah, so straight away. Yeah, straight away, I'm looking for this quarterly high, actually. I'm looking for higher still. Unless you give up like 5 cents, but I don't think that's going to happen. Realistically, not even 5. Yeah, it is 5 cents, like 0.04935. I think 6.330, yeah, 0.06338. That's the next stop for sure on this one. So you're pretty close. You're only like 0.00338 cents away from likely a not a full blown rejection, but an area of resistance for sure. However, you get through that, man, this could push between say 0, yeah, I'd say 6.3 cents to 7 cents is just I wouldn't be trying to buy this up here personally if it were me. Um, let's map out the bottom now that we've got more data. I don't like that this is untapped down here, but all right. Yeah, I would stick with these levels right here, to be honest with you. I would say this little box, which is a very small box, it's a super small window. I'm gonna blow up the coordinates for you guys. Between 4.907 cents and 4.935 cents, that's gonna be a super key area to hold on to, in my opinion. These are the low and the high from these prior quarters, because if you lose this high, you're probably going back to the open, coming in around 4 cents, and we'll move that up to 4 cents, which, you know, that doesn't seem like a lot because we're talking about going from 4.9 cents to 4 cents, but I mean, that's 25% almost, right? So it's really how you view the market, and like what you're trying to do with your money. So, but I do think this one is likely to continue up into at least 6.3 cents, probably 7 cents, actually, probably up in this region over time. And then that's the easy move, because then again, we start looking at this saying, okay, is this a larger range? We don't have that data yet. Um, it is one of those things where it's yet to be seen. So there's a lot of question marks there, but we can start kind of answering some of those, which I don't think this is going to be too helpful personally, because these ranges are going to be pretty big to the downside and pretty small to the upside. Yeah, there you go. You're at the range high right now. So you're actually backing off of a quarterly range high. You've filled in this inefficiency. Let's see. Yeah, I don't think this is going to tell me much. Not particularly. But again, let's get rid of these ranges. So again, we're looking at things based on time here. We're not looking at things based on market structure, but this little box, which we're going to fill in so that you guys can actually see it nice and easy. So now it's just a giant thick line, right? Notice this was the box on the quarterly lows we were looking at and quarterly high, and look where you're at. So you would want to probably live above this, correct? Between 4.9 cents and 4.907 and 4.935, really small window there. But flipping this into resistance would look like it's going to come down back into this region, and I would just take this line away altogether at that point. Probably just move it over here somewhere if there's anywhere to go with it, which there's not. That's not ideal. Actually, there is. Yeah, 4.8 cents. So yeah, again, kind of highlighting this region of support. So yeah, I would, the easy trade is actually this one. The easy trade is this. The reason I say that is, in context of this, you have clear resistance here. You've even got a local SFP right here where you can just kind of spot that this high was swept and then it was resistance. So you're probably going to get resistance up here around 7 cents. Probably, it doesn't have to. But you start losing, this move back down to like 5 cents. This is going to be support initially at a minimum. But the easiest trade would be to lose this little box. And you see how you have these nice clean lows right here? And that is so thick. We got to fix that. That's going to bother me. You've got really nice clean lows. So if you came all the way back down, the easier trade is, okay, I know I've got support here and I've got local lows here. So I don't want to buy impulsively and just ladder in to ladder in. What you're looking to do is see it come down, do something like this, and then reclaim the level. And you're looking to get in on that reclaim, right? Or even if it's like right here and you do that, let's say that you missed this reclaim and it does something like this. Now you're buying this reclaim. See what I mean? Because now you have invalidation. So you can put stop losses places. And that's how you build higher lows over time. You're just waiting for a setup is the thing. Waiting for a setup is like the hardest part of trading, because you can identify all the levels and then you sit around, you stare at your charts and you're like, I really want to trade this. And instead of waiting and being patient, you kind of like fuck yourself. I've done it. We all do it. I still do it a little bit here and there on like Bitcoin, but not as often, and it's always with much less money now. Yeah. So again, global point of control right here, that nice thick zone we just talked about, the quarterly low and that quarterly high right here that we lined up. in that box between 4.907 and 4.935. You got your global point of control coming in that region. Big area that you want to hang on to. Like if you come down below it for a little bit and then reclaim it, that's the ideal trade setup because you get that higher low effect. But you know, you don't want to be living beneath that and like putting in bearish market structure. Excuse me. And you want to use context. Like if the rest of the market looks like shit, you know, most people are like, why are all my altcoins pumping? I'm like, it's Bitcoin's pumping. That's the only reason why. It's not because of news or adoption, guys. It's because Bitcoin's pumping, so the rest of the market's pumping. Like, let's be very real with what's going on here. I don't pay almost any attention to the RSI, Redman. It doesn't mean it's not useful. It's just not something I use anymore. But it doesn't mean, yeah, there's lots of RSI strategies. We've actually kicked a few around, myself and Max behind the scenes ideas for like swing failure pattern strategies with the RSI because people like it. I said have to. Yeah, I'm sorry. And I try not to say that. I don't know anything about Gala as a project, guys. So I'm only telling you guys what's on the chart. So you guys are literally just watching me look at the chart and say, this is what I think. And therefore, that's what we're looking at. I probably won't be live too much longer because my kids are somewhere in the house. They're being awfully quiet, which is a little bit on the sus side of things. You know how it goes. Like you want to hear what they're doing a little bit, but you know, we looked at one on Sin City. We looked at comp, and I would like to relook at that one to see where it's at because I talked about it, and I like to kind of keep up on the charts. So I'm gonna pull comp up here. Maybe I am because I can't seem to find it. I've got so many coins in this folder at this point. You guys have no idea. I think is this it? Hey, this is not it. That is not the chart I did. Like I'm almost positive that's not the chart I did. Yeah, definitely did not make that chart on there because that's a really old chart. You guys can already tell how old this TradingView account is. It's been around for a while. Oh man. Did I do comp USD? I feel like there it is. It's on Coinbase. I fucking knew it. What did we talk about, guys? We said our 2020 low was the key level. And look at us getting that nice clean rejection off the 2020 61.85 to the penny. It's so pretty. Giving the low that you have to reclaim. You reclaim this and you can actually start like kind of getting a little more like, okay, where's my next range going to be at? Could it be this? Could it realistically be this high? I mean, it very well could be, guys. You could very well be. Oh, fuck. Hang on. Let's get rid of that magnet. And all I did was outline this so that they could see it on the show. But then you're looking at this as the EQ, and I mean, if you hold this as support, like, and I mean, like, you got to live above it, right? Because we're looking at this on a pretty high time frame. You know, we can go to like the monthly, for instance. There's your monthly. So just like the SPX gave you guys the key level, look at the monthly. Boom, 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 boom. So high time frames matter the most, especially when you're building a chart. Where's our next high time frame level? If we can clear this one, it's way up here at like $100, which is almost 100% move. So it's a really nice, clean chart. You've got a very effective range down here. You get above 61.85, things look decent. That's really all there is to it. You've got to be holding this as support. I'll show you guys the level. I pulled it on the 12-month. I just said this is going to be the key level to reclaim. It's an old yearly low before this thing made all-time highs. It's going to be defended, you know, and here you are, you know, like everything in this space respects the TA. And when people say that it doesn't, it drives me insane because the people that are driving this market that, you know, it's buyers and sellers, it's fear and greed, especially on altcoins. So these things do respect TA very, very well. And when people say it's the wild, wild west, which I heard Bill say that recently, and I love Bill. Like I have a lot of respect for Bill. But when he said that, I was like, that's not true at all. Like I would actually argue that the space maybe respects the TA a little bit better even than traditional markets. It's much cleaner, actually. So maybe it's because there's less competition, so it's not as difficult to trade. It could be that way. I would say that depends on how you're trading. If you're day trading something like Bitcoin, there's a lot of people that like to day trade the ES or SPX more because it's easier. And I can confirm that it is a little bit easier to get those intraday moves. You just need like one effective strategy. On Bitcoin, the volatility is very high. And that does translate to altcoins as well. So caution to the wind on the day traders for that. But as far as swing position and like level to level, this thing is very, very clean. Um, I see no issue with it. The only daily level I would mark above what we just marked out at 61.85. Is this the right level? Yeah, I would just box this off. I would just call this a zone. This is, oh, that's a big box. We're gonna get rid of there we go. Look at that. Now we got a nice box, guys. And there you go. Clear the box, go to $100, right? Otherwise, you've got a nice range down here between the lows somewhere around $33 and the highs at 61. Again, another 100% range, very large range to trade. So, we don't need volume or anything for this. I'm a big proponent of volume. It's one of the tools that I use the most, but you have to master the basics of market structure and price action. And then those tools become super useful because then when you're using them to narrow down your entries, you can use things like price action to find your entry, swing failure patterns, shifts in trend, things like that. It comes with time, but it does happen, and I haven't been doing this that long and compared to like some of these old stock dogs. I've got like almost 5 years under my belt, and like people are like, oh, he's the veteran. I'm like, man, there's guys that have been trading stocks for like 30 years, you know? So I'm still learning just like you guys, but it does get better over time, like for sure. You guys just get more and more fluent on the chart, so to speak, the more you do it. It's like anything. If you practice something an hour a day in 1 year, how much better do you think you're going to be at that one thing? You're going to be pretty fucking good compared to a year ago, right? So that's the correlation between it. Yeah, no, I agree with you, Redmond. I like to know when stuff is overheated. I like I said, I think that the RSI is useful. It's got a lot of good characteristics to it. I just don't use it as much anymore. I used to. Um, I'm more so good at picking out the pivot points in the market now and saying, okay, this is if I was looking for a full blown reversal, this is the area that makes the most sense, and I know what kind of reaction I'm looking for once I get there. So that's it. Yeah, no, I appreciate you as well for pulling in some Candle Mafia for sure because uh, he's said a couple times he's like let's link up and do some TA. It's like my TA is a little different than a lot of the guys in the space, so like I think that they've all this isn't throwing shade at anyone, but for lack of a better term, people have taken a lot of what I do and kind of like made it their own, which I like. I do appreciate it. Just like I've taken stuff from other people and made it my own. Like some of these tools that I use, that you guys see me using like on Twitter and stuff, or like in some of my videos, like forking and time and price, like those are things I all did myself. Like I came up with these, I formed my own strategy. There are things that you won't find in a textbook that, I think that we're in the era, and this is good for you guys that are watching. I think we're in the era of I call it the rise of the retail trader because there's more information available than there ever has been. These tools like TradingView are readily available. You can spend hours on the charts studying. You can learn order flow. You can do everything. The rise of the retail trader is here. The information is there. So anyone that's telling you that don't learn and don't, trade, I agree, don't trade right away, but definitely start learning because even if you don't want to be a full-blown day trader or even just a full-time trader, this can definitely aid you in your investing process over time, So like keeping up in the market, knowing when it's a good time to be involved, things like that. Like when there's indecision, you can just sit it out and you can be like, well, I'm really not interested in price till it reaches X price or down here at this price. So I'm just going to set a couple alerts and then I'll check back in every so often. And, I'm happier that way. You're not like glued to your phone or glued to, YouTube looking for like what's going to happen today, even though you're not going to trade it. You stop caring about that stuff in the middle, which is really important to do if you want to have any kind of life outside of trading. Not to get like too philosophical on you guys, but he goes, Berber beer. This is actually a Moscow Mule. It looks like shit. I was gonna have my one drink for the evening. Not a huge drinker, but I've been trying not to drink as much alcohol in 2023. Can't really do much working out in the next coming weeks for some reason. So for me, trying to lay off the alcohol a little bit, lay off the junk food, because I'm gonna have to keep that weight down a little bit. But it's been an hour, guys. I don't think I missed anything. I'm going to try to make more static content, like slow down for you guys, especially because I want this to be an educational channel. One thing I told Redmond I would do is I want to put out a video on risk management. He had some questions about leverage in the other group. And, he's new to leverage. And so they were really legitimate questions, like, hey, what's this and what's this? And I was like, nobody really goes over like how to use leverage and what it's for, like a real nice risk management. Like, hey, this is how you calculate your risk, your position size. This is how you track it. And I think that should be free information. It's like the very first thing we teach in our academy, but I'm probably going to redo it and just do it for public consumption. Cause as much as we say, don't use leverage, if you don't know what you're doing and you're not a trader, people are going to do it. You have access to it and you should know what it's for and how to use it, right? It's really there to keep you from uploading capital onto an exchange that you don't want to be at risk. So, you hear the not your keys, not your crypto thing, but then you're like, but if I want to trade it, I got to put it on exchange. Well, I currently have a position that's 15% of we'll call it my net worth, because that's what it is, open. And I only needed 9% to cover any drawdown on the remaining 85% of that Bitcoin position I was holding. So the rest of the Bitcoin that I did not short with is losing value on the way down. However, I shorted with 11.11x, meaning I only needed 9% of my portfolio to be exposed to that short position in order to cover the drawdown of the remaining assets. So as they're declining, I'm making that up with leverage on the way down. I added an extra 6%. So when I close that position, I'll effectively increase my net worth by between 50 and 80% as of right now. And that's in one trade. It took me a year to do it, to hold it. It was a lot of patience. I'll probably be looking to close that if we get those higher targets I've been talking about. And I'm already, I've already hedged that position long as well at 16.6 with some of that other Bitcoin in a different account. So you guys can see how leverage is now used. Like, I'm not uploading all of my money to exchanges. I'm definitely not using all of my money in a trade. I'm keeping assets that I want to continue to hold off exchange in my possession. I'm not exposing them to that risk. However, I do need to be able to hedge the market because I don't want to take the drawdown or miss out on potential opportunities. So it allows me to do it that way with less capital, right? So you don't need as much capital now. That's where people get in trouble because they use too much money. They use too much leverage. They don't calculate the risk, so it's an experience thing, but there should be some information out there that's useful to you guys. So that's what I'm going to end it with. Thank you guys for watching. Thank you to all. I think 26 of you are in here. So the chat was actually more than I could keep up with. But we'll try to do this a little bit more. I'm going to hop off here, see what my kids are up to, and I will catch you guys in the next update, hopefully on a Monday morning.